Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get some high. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 22nd of May. Sentiment overnight looking a little bit weaker. This story that we mentioned yesterday in our market recap, and by the way, if you didn't watch the market recap last night, I would really appreciate you go and give it a look, put a comment on it, tell me how you think I did, if that was something that you would like to continue to see in the future or not. It was a lot of work, kind of gonna have to give it a little try run and see if it's really worth doing, but I do think we provided a lot of useful information. But anyways, we were talking about Hong Kong, and this Hong Kong thing seems to really have markets upset today. So they went and they tested the 100% or our second target in implied volatility in the E-mini. So come over here into charts. You can see pretty significant downturn overnight, but quite the recovery. But, it's kind of a range. They might turn back down. The thing is that we've got this weekend coming, right? We got a 3-day weekend, and you can see really weird stuff before the weekend. And often what will happen is you get you'll either get a really big mover day, or you'll get a super meh day. And given how much news has been going around and all of that, I think that today might be one of those really volatile days. In the treasuries, there was a little bit of a move up overnight, but then we came back down and we've found some bits. So I'm kind of watching here to see if there's a flight to safety start to coming in because of the weekend. I also want to just point out over here in the upper left, the dollar, that's the yellow line right here. Dollar has been moving up. They were almost down to 99, which was a significant drop, and now they're pulling back significantly. You can see the euro has fallen quite a bit. Gold, gold actually took a dip yesterday, and now it's coming back a bit. So, and then our treasuries should be clear from the chart. Or let's just come over here to the DOM. They've kind of found a bid around 5.5, 6. We don't really have any significant news. There's some retail sales for the Canadians, but don't have a whole lot on the news schedule. I should check Treasury Direct here. I don't, it's Friday. I don't think they do that stuff but I need to start getting in the habit of checking that, because that is one of the things that I miss a lot. Now, the next auction date that we have is the 26th. All right. So that's where we're at. We're already, man, look at that, 2 ticks. You heard what I said, and y'all went and bought it, didn't you? Well, we'll put something out right there. Cap comments on my video. I love this video. Make it a regular thing, but longer? I don't know. I don't know if I can keep people's interest for more than... So that's a lot of information to stick into 20 minutes. Let's see what's going on here in Discord. Yes, we need to pull you over here. Oh yes, and we need to pull up the Texas Beach. Well, the equities there when they turned around. All I'm not quite sure where I'm looking for here. The treasuries, I would really like to see 16 or 17, but in the E-mini, man, like maybe so 28. Well, 28.20. Maybe if we were going to take this particular drop, and man, that's okay. I think I'm a little too late on that one. 29.37 is a key neckline, so maybe watch that. Oh, cool. Thank you.
Junior says good morning, Seth and traders. Let's have a great day.
Well, they're already moving around. They're already moving around pretty significantly. I don't know if there was like a headline there. Bank of England to phase out some emergency COVID support. Bank of England will begin to phase out emergency support for financial markets that it introduced in response to coronavirus fears in March. That's just coming through the wire. UK Prime Minister Johnson's spokesman monitoring Hong Kong's situation closely. Expect China to respect Hong Kong's rights and freedoms, committed to Hong Kong's autonomy. I mean, this Hong Kong thing is I didn't even know, like, are we gonna see like things really finally blow up in Hong Kong? Wow, they traded down at 07.5 so easily. There was a lot of iceberging in 08. That tick down there was quite unexpected in my opinion. Well, they traded it back up, but man, I guess they might be mirroring the S&P 500 at the moment, and the S&P 500 take a little bit of a dive and then a pretty big upturn and threatening to go and push another high. I don't know. So yesterday's close at 29.37. That might be a spot that gets some interest. Let's see here. What's been going on in the equity indexes? Wait, I thought, oh, you know what? Well, that's all I need to know. Somebody's banned. Oh, thank you. Oh, thank you, John. That sounds like he seems to think that he made a trade call, but I'm not understand how he was able to say anything in that particular room. I must not have things set up the way that I think I do. Okay. Well, they take away. Take away, but not really holding it. It's not, unfortunately, not really the best spot for me if they're going to be doing that. Let's come in here and reset my levels on the DOM. U.S. condemns China's proposal to unilaterally and arbitrarily impose national security legislation on Hong Kong. This coming from Pompeo. To ignore the will of the people would be a death knell for autonomy promised under the agreement. Okay.
Leandro Matias says good morning.
Yeah, I don't know how he was able to talk in that channel. Wow. Doesn't matter. How is he? Oh, I'm so confused. We should tell Chewy our big long. So we got this guy in chat who I really like, and I've been messaging a little bit. But his name is Chewy in the equities room, and he's really good. I just have to say I don't know if he wants that kind of attention, but he's a good trader. But he's new, so he doesn't know some of the community history. And there was a little bit of drama in Discord last night, I guess. Well, anyways, Canadian March retail sales, we're getting a negative spot 4 versus an expected negative 5. That's X autos. Retail sales month over month negative 10 versus an expected 10%. So roughly in line here. Although I don't know what the deal is with the X autos number not being nearly as negative as we thought it would be. Canadian numbers, I don't know if they're really very significant. Let's see if any of our favorite traders on Twitter said anything overnight. Again, noticing that the Chinese yuan falling against the dollar. Okay. So here comes the E-mini deciding to break the previous little swing low. And again, 38 is kind of a How do we say, relatively significant line in the sand because of the previous day's close. I don't know if the close doesn't really matter. People are gonna play it, but I think the previous day's close is like you just ignore it, especially in this situation, because the way that things all kind of fell out yesterday, there was like quite a bit of noise at the close, and there was quite a bit of volatility throughout the day. People trying to buy the dip and it not really working yesterday. So look at that. They took 8.5. Did not take a whole lot for them to do it. Mm-mm-mm-mm. Yeah, I guess I should check these links. There must have been somebody else banned or something. No, I hate that part. The streamer mode thing is like unnecessary for me, but it always tries to put it in here. I just wanted to see. Yeah, I don't.
Claudio Ibarola says, hi, could you explain the reason why you take this trade, please?
Yeah, sure. So the reason is that I'm expecting people to come into the treasuries. I think that it's going to move up, and so I bought it. I'm trying to come up with like a really clever explanation here, but it's I don't think that either of those things were very funny, were they? No, I think we're going to go up to 16. I'm looking at the range. I'm looking at where we've been overnight, and I think that there's going to be a move into treasuries, and they're bidding up. So that's why I got in. I really would have liked to have been in at 6.5, but they went 6.5, 7, 7.5, just like really fast before I, clicked in. So I missed it. Okay, so '08 did go offer. Mm,
Claudio Ibarola says, okay, thanks.
Yeah, it's just the sentiment situation and the spot. I'm not particularly happy about '08, mind you. So we kind of see how this goes. In the E-mini, they took a little bit of a dip, but it's probably going to take more than that to get people to pile into treasuries.
John Nelson says, Visem Privet.
What does that mean? Okay. Do have this order down here. If I can happen to catch that, I'll be okay with taking it. But then if I do get it, I'm going to have to scratch it out. I'd say, well, I mean, the E-mini's been moving a fair amount today, but it seems a little bit choppy. Like we've had maybe 2 strong candles down, and we've had a few strong candles up. They're definitely like um, on alert, but it's not really going, is it? UK Prime Minister Johnson plans to visit US President Trump next week. Eric Trump tweeting more voter fraud. This sadly won't be covered by anyone in the mainstream media. Who knows? This exists all across the country. Oh yes, I'm talking about the judge of elections in Pennsylvania. Patrick Rooney is tweeting that China has let their currency tumble using the yuan as a weapon. It's a thing. I don't know. I don't know about that. There's every reason for the yuan to have moved overnight, you know? Let's see if we come over here to my chart where I can see the yuan. I wish I had that data inside of this, but can't see it. I can pull it 07.5 now too. Yeah, I don't like that. Okay. Man, they're moving up there in the E-mini. Little take, and they come down 2 points, huh? Dr. Fauci calls Moderna coronavirus vaccine candidate quite promising. Maybe a reason for the small little move up, but probably not really a significant piece of news at the moment because we already know about the vaccine and all that.
DJ Spinglass says good morning. 2 days ago I heard you mention iceberg. Were you referring to a candle pattern?
No. So what an iceberg is it's the technical name for it. The exchange calls it a refreshing order. It is a feature of the exchange that basically allows a large trader to put a large order into the exchange, but only show a certain portion of it at a time. So what he'll do is he'll come in here and he'll say, "Oh, I want to, sell 5,000 contracts here," but it'll only show 500 at a time. And then if he gets hit for like 200 of those, then it will automatically add 200 more back on. So what ends up happening, what you see on the DOM, is you will see orders going into that price, and the level 2 won't change, right? Like if there was an iceberg at 07.5, then we would see like 2,000 trade here at 07.5, but see it be basically at 900 on the offer the whole time, right? And that's called an iceberg order. So Jigsaw will draw these little circles where it's seeing icebergs in the E-mini, for instance. And there can also be exchange traded icebergs, and there can be synthetic icebergs. So a synthetic iceberg would just be that they would submit an order to sell, and then when those get filled, it very quickly puts more on. And those ones, you will see the level 2 change, but the price will hold. So icebergs are kind of an interesting thing. There is a newbie tendency to want to just fade the icebergs because there is a slight chance when you see an iceberg that it will hold chance. Something like 55-60% of the time. But the issue with icebergs is that you really don't know why the trader is doing it. And that's why we were talking about it 2 days ago. You don't know why that big guy has the iceberg there. Is he entering a new position? Is he getting out of a position? Is he trying to hedge something? You don't really know. All you know is that a large trader is doing something at that price. So generally, when you see something like that, at the moment, I'm trying to avoid it. But it's going to be very contextual. Like if you see an iceberg first thing in the morning, it's going to be very different from if you see an iceberg late in the session, right? But they are still, the market. They're influential on the market, so you still kind of want to keep track of them. Okay, yeah. See, they're going to come back down here.
Leandro Matias says, is the ice buy indicator available for Ninja?
It is actually. So in Ninja Trader, if you have a full license
Ewo
and you
Severin
throw in
says, good
indicators.
afternoon or good morning.
Hey, how are you doing, man? Thanks for joining us yesterday, by the way. So you got an order flow trade detector, and that's basically their iceberg detector.
Ewo Severin says 2,941 is the VAH.
Okay.
Leandro Matias says thanks.
It seems to me at the moment that they're kind of. I think that on the open in the E-mini, well, maybe even at the top of the hour. Let's see what happens. But I kind of see a lot of flow here. Well, a decent number of orders, a couple thousand here. And they're all kind of seem to be fighting over this yesterday's close area, which is a number that I don't think really matters. It's a number that I don't think really matters. So, yeah, we'll see. We'll see what happens. Okay, cool. So that did go. So the first one was at 8. Okay. China bets the U.S. won't do anything about Hong Kong takeover, and so
Matt
do
Cooper says
markets.
I think it's just building shorts and will puke on the open around yesterday's close.
It could be, but it's just kind of a mishmash of volume, and it really looks to me like we're getting a lot of really bizarre um correlation order flow. So like when the E-mini moves up a point, the 10-year is ticking down, and vice versa. So it's like the correlations are like really strong right now. But then I bet you there's a decent number. I don't think that it's big traders, but I bet you that a lot of smaller guys are messing around there, and they seem to. I'm just pointing out that they seem to care about the yesterday's close and yesterday's open. So you take 29.37 and you take 29.33, and they're just gonna flip, right?
Iwo Severin says so they are trapped between Val yesterday and VAH today Europe, so maybe shorts get active around VPOC yesterday 2953.
Well, that could be a possibility. There could be a move up, a test on the move up. Like if they don't have a little move down before the open. Okay. Did my data just poop out there? Cool. Cool. It's not cool, but you know.
Iwo Severin says yesterday was a B profile, so could be the case.
Yeah. Well, the thing that I'm just seeing is like the thing that's in my mind is the sentiment overnight definitely changed. This China story, really, it all happened yesterday, and the market did react to it, but it wasn't like the dominant thing. Like it's not like the thing that everybody's talking about. This morning, you look at the sentiment, and the market's definitely reacted, and it seems to be the thing that everybody's talking about. So sentiment has definitely changed overnight. So now I'm looking at it and I'm thinking, okay, but will the US session do something? Well, so one thing that kind of gave me a little bit of um a little bit more confidence um that we'll see this move was that Secretary Pompeo was saying stuff. So the US is still wants to show support, although the market is basically betting that they're just not going to do anything and they're just going to let China smash Hong Kong. I mean, that's what basically what's happening here, right? Is Hong Kong's autonomy is being destroyed, and it's highly. I don't think that you're getting to a point where the people in Hong Kong that want independence aren't going to be able to sit around anymore. You know, like they will have to do something. Um, and so that's going to cause a little bit of economic trouble. But then if world leaders decide that they're not just going to take it idly. And I don't think that means they'll take military action, but maybe they could do something like further sanctions or something of that nature. Then you can definitely see some disruption to the markets. But my strategy going in here, I think, is much more to do with the holiday itself, right? I think that when you have all of this, there's a lot of risk involved, and we're at the height of what was a pretty massive rally. So I think that it would behoove the smart money managers to take profits. And I'm sure that was a lot of what was going on yesterday, was people panicking and trying to take their profits. But I'm just on how messy this has been and how it's gone. I think that there's still a lot of positions out there. So I think that we're going to see some messy action here, but that will move down in the E-mini. Now, the issue is they might try and there's a really, really good chance that they're going to try and test higher first, right? Okay. 06 half goes offer. I'm noticing a little pickup in activity here. It is the top of the hour now. I don't see anything coming in on Twitter. They traded down. Oh, okay. 5 went back up into it, but then look, they stacked 2,000 on it. It seemed really coordinated. Five-year doesn't seem to be buying into it. European Central Bank tweets the coronavirus crisis calls for both fiscal and monetary policy response, says ECB Chief Economist Philip R. Lane in our latest podcast episode. Blah, 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 blah. It's kind of funny how central banks are kind of turning into like this, like, do we have to educate the public and, we need our own PR outlet now and everything. Not that that's going to convince anybody, but okay, so to move up here, there is a little there's a pivot point up at 29.46 or so. Just a little short of that. Ouch. We don't want to mess with that. I think we got to say we were either wrong or early. So the issue with if we were early is that sometimes it's like, well, then let's try it again. But that was a pretty aggressive stack right there. I mean, they were already stacking aggressively at 06.5, but now on the downtick, stacking aggressively at 06. But this is the lower end of the range that we've been in it for a while. So they might be doing that because they're trying to move it. So you kind of keep our eyes out for, okay. So they took 26.51 on it. I don't think that stuff at 06.5 is just going to pull, though. Okay, so they're hitting into 06 again, and now it's absorbing a little bit. So this definitely looks to me like somebody managing a trade. Hong Kong leader says government does not expect protests to end. They crash into 05 half. Okay. Well, I definitely did the right thing bailing on that, but could have limited the damage better. So now it's across the curve. Okay. It's kind of interesting that they're pushing it as aggressively as they are because the mini, you know, retraced almost that whole move up. Hmm. I wonder if they're trying to push it into yesterday's value area. Well, E-mini's still kind of hanging out at that 41 area. Like, that's where we spend most of this time. Okay. Tick up. They were offered at 05 there, right? Look at the 5-year there. Has it changed? It certainly did in the 30-year. I'm just looking at the book overall here. The 30-year book, it did come down pretty significantly, but the other two did come down, but not like a big deal. Okay. Something a little frustrating about this move in the treasuries is that the cumulative delta is not really changing. They're just moving it with the book. Hmm. I'm kind of looking through some of the correlations here, and I think some of this action that we've been seeing doesn't completely make sense to me. It's kind of like they are risk adverse, but they're not coming into the treasury. And that might be because of dollar strength, which is kind of weird, but what about the spread? What does the spreads look like? Steepening in the 2s and 10s, steepening in the knob, steepening in the 5-year. Then they take 12.35 there. Hit that back pretty fast though. I don't think I understand what's happening, setting up here, and the open's about to happen, so I'm gonna.
Trader Josh says good morning.
Good morning. It's been a quiet day. The markets are kind of flickering around, but it's kind of looks like a lot of noise, and I'm not quite sure if something's going on or what. Maybe the equity traders are going to come in and try and fill the gap, quote unquote, and move back up to 29.55.
Ewo Severin says pump it. Ewo Severin says Dr. Fauci is still confident US could have a coronavirus vaccine by December. CNBC.
Do you think that's it? But the market is not really reacting to that headline so far. I'm not really seeing it on Twitter. I do see that on Trading Floor Audio a minute ago, but
Ewo Severin says they try each time, same shit.
right. Well, something in
Ewo
the
Severin says heavy level
treasuries.
give a news.
It's well, hmm. I mean, I'm definitely wrong, and now I'm kind of looking at where they might go to on this side, and
David Graham says hello Alice Gut.
I don't know what that means. For some reason, there's been this weight on the treasury, like they were going, but then they pushed it back down. But
David
it
Graham
was
says all
all
fine with
liquidity.
you.
It was all liquidity. We're doing okay, I guess.
Ewo Severin says yeah Alice Gut. David Graham says Jaja Heistlekmish M Arsh.
Hmm. Did you see that iceberg Godot 3.5 offer? Yeah, there's definitely. I think that what's going to happen is the E-mini is going to come in and they're going to try and do a little bit of a pump and see where they get to, and they're going to try and regain these levels like 29.60. Yeah, just right there. Whoops. Let's try that again. Hmm. Well, so far the cumulative delta has been negative by it's only slight, and it's still pretty slow, and the treasuries are still kind of acting fishy. Now I'm seeing a bit of volume here in the 5-year. Yeah. Hmm. Hmm. And the treasuries come back 4 ticks just like that, huh? Okay. So that looks like that was the bear push, and it's going to flip here, but let's see. Hmm. There's some stops on that one. out of that one. I think that what I need to do is I need to just wait them out a little bit and get some water. All right. See this in it's the treasuries. So the difficult thing in the treasury right now is that volume is not really the determining factor of where it goes. They're still at 29.33, which is yesterday's low. Like the E-mini is coming out here like they're selling it like crazy, right? The treasury is still below, well below where we were in. Well, the 30-year book flipped, but the others did not. Now we're getting this thing down here. Hold the boat. Actually, it is significant. It's not excessive yet, but there is some absorption here in this area. And the treasuries aren't exactly priced like we're going to have like a huge sell off right now. Okay. Big slip there. That one's really odd. Yeah. Okay. Okay. It's being pretty flaky here, the E-mini. White House advisor has her all options on the table for China-U.S. studying very closely economic penalties. Hmm.
RJ Wheel says hit the VWAP on the nose.
Which one? RTH or ETH?
RJ Wheel says S.
Now, I assume that you're talking ES, but RTH or ETH? Well, I tell you what, it's kind of been in this spot for a while now. You can kind of, if you look in that chart in the bottom right, you can kind of see a concerted effort for them to try and bail it out, but so far they haven't made it past the line yet. They're going to bust through 34.
RJ Wheel says ETH.
Okay. Yes, they did. So now they're right at the ETH VWAP and trying to cross it.
RJ Wheel says VWAP. RJ Wheel says I knew she could do it.
There you go. Well, do you think that they'll make it back over the open? That was tough to hold on to.
RJ Wheel says of course I can RJ.
The internals never really went all that negative. That's interesting. Well, I got another fairly significant line here. They need to cross at 38. A little bit buying into '05 and it holding in the 10-year. Okay. You can see trend doing something weird here. Looks like the volume on advancing issues is making a slight push. Well, I don't know. Normally, after a move like that, they come back to the open. So, okay, well, the treasuries did tick back up too. They fought it a little bit, but did do it. I must be like breathing all the oxygen out of this room or something. I just don't feel like I'm getting air in here. Well, they're pushing up. There was this 38 level they've had trouble with. There's a pivot there. Looks like there's a pretty good chance you're going to get it though. Yeah. Okay. This move up has been kind of slow and steady. Where's this? Okay. Hmm. It's curious. It's the Treasury saw a pretty good move down against us, and now after that, and the market's open, and they're not really moving a whole lot anymore. How was my volume profile look? There was definitely significant absorption down in the 33 area. And the amount of volume that we're trading at 38 is not even close to as much. That was a lot. That was a lot, a lot. Hmm. Well, it's still fighting it for now. Hmm. Pantheon Macro. Yeah, follow them. Being retweeted by Ransquack. Something that I really hate about financial products is you go in and you look at the product and they never give you the price. They never tell you what your monthly subscription fee is going to be. Oh wow, that came back fast. Wait, did it? Oh, I guess okay. I don't know. I'm just looking at it on my dumb, and I'm like, oh wow, that was like half of the move came back while I was looking at something else. But I don't think it changes anything. The treasury is tick higher. Previous close 29.3650 again.
Trader Josh says, are you looking for the S to go above the open?
Yes. Although, well, so far I would say that everything is still okay for it, but I mean, I feel like we're kind of being set up into an extreme situation here, right? Like if we go back to the open, there's a lot of shorts down there, right? They're going to be very, very upset if we make it back to the open. On the other hand, if we don't make it back to the open, then it's sell time again. Based on the amount of volume that was traded down there, the volume and the way that these things typically go, and just the overall. I mean, the thing is that when I came in, my original plan was that we were going to expect some selling, but what I saw in the treasuries kind of told me that that wasn't what was happening. So now the treasuries are actually ticking back up to oh 06 half. Well, remember that 08 half was where we were at the high. So like, that was before all of this happened when we were much, much higher. So in the E-mini. So I'm not sure what the deal is with the 10-year treasury, but I think that what's going on over there is there are a lot of other forces pushing it around a couple of ticks that I just have no clue about. sellers are going for it. I'm starting to see significant amounts of absorption again. This time around the 34 area.
Trader Josh says maybe it's because of the long weekend.
Yeah, well, there's definitely something going on with the long weekend, but I really thought that the long weekend trade was going to be pile into treasuries, but that I just doesn't seem to be the case. Well, I suppose it could be because uh, the the volume is not necessarily what is moving the treasury. The book is letting it move around. Just a little curious that now they've come up 2 ticks. Like I just haven't been able to catch a break in the 10-year. Now the treasuries move up, huh? And you see that whole move up, if you look at this tape right here, is asks pulling. Now they're going to go to that low. There's a lot of contracts trading there
Trader
again.
Josh says, Seth, it was great chatting with you. I'm done for the day. Have a great weekend.
Hey, thank you for stopping by, Josh. Sorry, it's been a little quiet in chat, but we're coming into the summer. It's gonna be like that. And it's a Friday. We never seem to get it on Friday for some reason. I don't know. I mean, they had their chance down there at the lows and they didn't take it. Of course, the buyers haven't taken it quite far enough. Well, okay, maybe that was enough for people to say, okay, it's not happening. But I have to say, even if I had kept with my short bias, I have to say it's not with what I was looking for to have happen. Something like that low shouldn't be able to hold. Something like a return that back to that low of the day. There's no way that they would hold that, and yet there they did. That doesn't mean that they can't go down for the low. I just think it means that the sentiment that I was expecting to see happen is not happening.
Kevin Wimmer says, just curious, Seth, did you analyze if you are better with longs or shorts in the Amini? In my case, I hate going short. Only 10% of my S trades are shorts and usually only after fades of highs.
Well, that has just depended on the environment. I think overall you're going to tend to do better going long in any instrument. Because if you go long and you happen to be long when money is coming into your market, it's going to be easier for you. This whole thing today, though, I don't know. I think it is the
Kevin Wimmer
case.
says, I tend to disagree. I prefer shorting CL compared to longing it.
I don't know. When money is coming into your market, you'll make more money. How often is money
RJ Wheel
coming in
says
on the
shorts
short
are
side?
easier to stop manage.
Well, that might be true. Like, you definitely get this thing though, where like shorts are so much more likely to stop you out too. It's just kind of weird.
RJ Wheel says longs tentative. Shorts furious.
I don't know. So like just that move right there. I mean, I think we're wrong, but was not given everything else that's happening. I expected to see a lot more fireworks if they were to break it. I don't know. And the Treasury didn't even react to it at all. Anyways, I was going to say, I think it's the case that I just don't know enough about the fundamentals that drive the market on Fridays. There's a key piece of information about how people take their positions off going into the weekends and things like that I just must not understand, because I find the patterns of behavior on Fridays extremely difficult to predict. Okay, so the Treasury came down at 2 ticks there. Well, maybe it wasn't 2. Yeah, it was 2. It was 3 ticks. And the E-mini is suggesting they're going to bounce again. Buyers haven't quite made it over those spots where people like freak out though.
Kevin Wimmer says OFC, it always depends on the day. Shorting a long day is suicide. The thing I like is that they are usually faster. AKA if I aim for a small scalp I need more time in my long.
Well, that's true, but what I'm getting at is that um the market will not fight you as much on a long. So like you think about it as like uh, there are hedgers coming into the market and really they don't necessarily expect to make money. So the money that the hedgers end up losing is the money that all of the scalpers can split amongst themselves. Okay. So then the more hedging that's coming into the market, theoretically, the easier it's going to be for you to make money. And so the question is, what is there going to be more hedging? When is there going to be more money coming into your market? When it's going short or when it's going long? Well, money can definitely come in when you're going short, and there can be good trading because there's swings, so you can get in, you can go fast, but there's also that upside downside volatility skew where you'll find very often that unless you catch it early, that it's really hard to hold on to the short. Whereas when you're on the long, it's just like they just throw money in there, and you might have to hold it for longer, but you don't get as many adverse ticks against you. And I found that the times in the 10-year, almost unquestionably, I don't have um, a bias whether the longs or the shorts necessarily make money. But when the treasury is moving up, I always do better in the 10-year. And conversely, in the E-mini, even though I definitely have taken shorts and like to hold things and stuff like that, when the markets come down, it's really hard to make money. And I'm sure that you're going to go through the stats this year, who made money and who didn't, and you're going to find that as a statistically significant portion of retail traders failed more than usual. Of course, most retail traders fail, but I think that this year you're going to see more failed than usual just because so much money came out of the markets. Where does it come from? They take it from the scalpers.
Kevin
That's
Wimmer
why.
says same for me in the Amini, but I would say that always depends on the market. CL and natural gas for instance are range or more short biased markets, at least the last years.
Yeah, well, and the thing
RJ
with the
Wheels says
oil
agree
is
Kevin. Shorts furious on bear days. Shorting a long bias is just handing your lunch to market.
the the oil market is just really volatile anyways, right? So but the other argument that I would make is like, when markets move down and get volatile like this, liquidity pulls, right? There's a reason that the liquidity pulls. It's not favorable to the market making robots. But it does depend on your strategy. And definitely if you're somebody that like wants to catch a runner but doesn't want to be in it for very long, then I could understand how that could affect your results. Hmm. See, I just none of these things should be able to happen. They shouldn't have been able to bounce off of that initial failure of the low. Then they go down to a new low.
Kevin Wimmer says I always have to laugh Seth when you say oil is so mega volatile and you trading the Amini right now. Most of the days right now even the Amini is more volatile lol.
Is that the case? That might be the case. It's definitely when they're moving 10 points at a time, the E-mini sure seems volatile, doesn't it?
Mark John says, Seth, have you heard of the gamma bands for Sierra chart? They can show the upside-downside hedging skew you speak of.
So I have been somebody else had been showing me a website where they were publishing information about gamma skews and where things kind of flip on people and stuff like that. With the indicator that I'm looking at, I'm not necessarily looking at um, how the options play out for specific prices. I'm just looking at the implied volatility, how much the implied volatility says that we can potentially go in a day. Which, by the way, I haven't checked today. We should do that. Okay, so target 1 below is 29.14. Target 1 above is 29.70. Anyways, as I was saying before all that, it seemed to me like for them to come back
Mark
down
John
to the
says
lows.
that's what the gamma bands do, but they adjust for skew in S versus CL, etc., etc.
I'm really surprised that they bounced before making a new low. And then even after that bounce that they did go to a new low. And then I'm surprised that when they did make a new low that there wasn't all that much stoppage. And now I'm surprised that they are now a little bit higher than that after breaking a new low anyways. So what is the takeaway from that? Any inclination that I have about the way that the E-mini is going to move just based purely on movement is probably not very reliable, is it? I will point out the way that I feel about certain things, but I don't think that any of those things are reliable. The basis for the trade was that the sentiment was slightly negative overnight, but the market seems to be ignoring it. And like I said, if the sentiment is more negative and they really are out there to sell, they should be selling it, and they're not. So that theory must be wrong. The question is just what else might be going on in the market that I'm not aware of that might screw all that up, So did we, by the way, and we're kind of in counter trend period, aren't we? This starting from the low, this reversal up has been all during the counter trend period. And man, at my spot at 29.32, the amount of absorption there is really extreme. 16,000 contracts in spots. That is a lot. Well, we saw that the other day when we were having a big down day and it just kind of like magically got saved. You guys remember that? When was that?
Kevin Wimmer says, for instance, since London opened, the range in oil is 171 ticks and a mini range from low to high is 168 ticks. Yesterday oil had 140 tick range and a mini 160 ticks.
I think it was May 14th last week. Yep, last Thursday. Remember last Thursday, it was like this just miraculous save in the E-mini? And that was similar amounts of volume. So when we saw all of that absorption, I guess the reason I'm bringing this up is that when we saw all that absorption last week on Thursday, we came out of it and we said, well, that must be the plunge protection team, right? And now we're seeing similar stuff. It's kind of my point.
Kevin Wimmer says Monday is holiday, right? So markets close 11 your time, right?
No, markets close about 2 o'clock my time. I don't think they close early today, do they? Could be wrong. Could be clueless again. I don't know if it's an early close.
Kevin Wimmer says not talking about Monday, 2:30 from now.
Oh, yeah, I don't know. I will stream that day because I like to keep my schedule, but we're not going to trade or anything. We'll program some stuff. I have a list of things that people have been asking about that we can do. A couple of small little ones that we can fix up for people. So I think that's probably what we'll end up doing on Monday.
Ewo Severin says could you zoom in a bit more the S-DOM?
Well, I mean, we had it like that at one point, and it was like too hard. It moved too fast, and so we had to bring it down. And with the amount that we're trading, I think that we do need to be able to see that. So I think you should still be able to read it. You just might have to make it like full screen or something. I don't know. I'm not quite sure what to do about it. Could open them up over again or something.
Kevin Wimmer says yes, holidays equals holidays for me lol, can't trade those days.
Oh yeah.
Even the London session is usually pretty boring and slow.
Don't bother trading on
Ewo
those
Severin
holiday
says
days.
yes, I put you on the bigger screen.
Yeah, and it's still, I bet it's hard to see. I know, because it does bother me. I like it to
Ewo
be
Severin
big, like
says
all
keep
of
the
them.
wife out of living room grin.
I like to have them all big. I could try flipping things over, but then that kind of messes up where I have to look at. So I kind of like that the E-mini is over here and then my charts are like just to the left of that. And if I moved the E-mini all the way over here, that would be a problem. And if I have to move my camera all the way on the other side, that also causes other issues. But I think it's a temporary thing, right? Like the E-mini is going to come back into a normal range and we'll be able to scale it back. I wish they had options for like variable size. Like the first 4 to 8 ticks should be really big, and then everything beyond that should be smaller. That would be cool. Okay, well, they're pushing back up there again. They're not quite. Oh, they did beat out the previous swing high by a tick, but it's still short of the open. I mean, I don't know. I think I've got the trade here right, but the patterns of behavior I don't seem really bizarre to me. And it just doesn't seem like normal ES behavior. It's being a little bit more stubborn than usual. Okay. Well, now they're kind of holding that area, so they're definitely going to trade the open. Oh man. And it's such a so here's another thing that's interesting about this kind of a setup is that the open, sorry, the high of the regular session is so close that they can just rocket through there. And then above that, you got well, that's a swing. And then above that, you got 52. And then above that, you got 55. So it's totally possible for them to make 60. And the implied volatility says that they're going to get to 70. But I can just kind of see all of the dominoes lined up for us to get there. Interestingly enough, despite some of this movement in the E-mini, the treasuries still haven't really made a move.
Kevin Wimmer says, do you have a statistic about how markets usually trade the day prior to holidays, especially with a whole weekend in between? My stomach feeling would say people would be more cautious and therefore. Kevin Wimmer says range bound or short day.
Yeah, so this is definitely something that we've kind of looked at in the past, but I don't have a good enough framework to be able to filter down to specific holiday days like that. It's something that we would have to build, and it would be a lot of work. But it probably is something that we're going to need to do at some
RJ
point.
Wheel says ULL lose money with that premise.
And but I have there it seems to be from my own observations, I've seen a split personality to them. I've seen some really strong trends or really wild days ahead of holidays. I think the other thing though is that you would really have to look at this specific holiday, right? Because this specific holiday is different in that a lot of market participants leave the market after this. So that's going to have a significant impact on how it plays too. But I don't think that the answer is necessarily that they're just more cautious and therefore et cetera, et cetera. I mean, maybe the day traders, yes, but I think that you
Kevin
got
Wimmer
a ton
says
of
at
hedge
RJ Wheel, I
funds.
tend to disagree. You could, for instance, manage your targets. Let's say quick scalps instead of waiting for the big runner.
I think you got a lot of hedge funds that have to manage a lot of money today, and you know, I think that you might have people that are in on a weekly basis that don't just want to be out before the weekend, things like that. So why we're kind of like, I'm a little confused why the treasuries. I guess the issue was that I tried taking those trades around 06 half and '07 when I really should, the trade that I wanted or really should have been down at '04. And then when we got down to '04, I thought that it's like they're just selling it and they're just going to trend it, and that's not what happened either. And if I had just realized that 06 is the spot. So here once again, so far they've come one tick short of the open. It's like literally every step they do something unexpected. It's really quite interesting, isn't it? But I do think it is in line with everything else that I'm looking at, because everything else that I'm looking at is that the ability to predict price movements based purely on the market generated information is extremely unreliable. So of course you're going to get a day where it just surprises you on every turn. That's why I can't really rely on that. Well, so I'm noticing here on this turn down that maybe they're already a little too far. The thing is that even though they're able to come back up and everything, some of the indicators that you'd see that would say that, like, okay, like they're ready to go straight up long now, aren't necessarily happening. Another thing is, if we were expecting this to be a little bit more range bound, Kevin, wouldn't we expect to see the VIX come down going into the weekend? But that's not what we really saw. It's actually just slightly higher than it was yesterday's close. Probably because of the slightly weaker sentiment in the overnight session. We're increasingly of the view that in Australia, it's not going to be a V-shaped recovery. It's actually going to be a W. Goldman's Rothberry says we think the fourth quarter is going to be potentially the worst quarter, and corporate Australia is coming around to that view. Okay, I'm getting some clicks with some orders on the bid at 29.3750. And the Treasury's finally coming down. Oh, they're coming down aggressively.
RJ Wheel says my observation is there is no caution before holiday. Now it's been a huge bull market for 10 years. I've been in chat room over and over with traders shorting before holidays and they get creamed.
Yeah. Well, I wouldn't necessarily, I don't even think that whether it's long or short really matters. The thing that I'm looking at and talking about is just how far is it going to move on that day. And I have found that there have been days where it moves a ton before holidays.
Kevin Wimmer says I never really bothered with the VIX. Does it include the whole overnight session or only the regular one?
Only the regular.
The regular session today is tamer than yesterday.
There are VIX futures, but you have to pay a lot to get that data. And I don't get that. And I don't get regular VIX data either. I'm looking at it delayed on TradingView. I'm really thinking about changing my subscription though to get it, so that I can do some more work inside of NinjaTrader. Really quickly, what is noticing that oil is down $2 today? That's curious. Do you know why we're down $2? So I see people on Twitter blaming China.
Kevin Wimmer says side. Kevin Wimmer says at RJ Wheel so like swing trading? Shorting and holding over the holidays? I mean rather for short-term trading, like long below a swing low and short above a swing high, if the statistics are on your. RJ Wheel says no, just guys piling shorts on in last 2 hours at the slightest wobbles and the market just cruises up to higher pivots.
I don't know. I think my take on it right now is that the market forces that we're dealing with today are ones that we don't understand very well. And, it doesn't happen very often, so of course it would make sense that that would be something that we know less about, but it's always been a thing on Friday. I have a hard time on Friday for some reason. The way that it behaves, it tends not to do what I expect. So we're kind of going to need to look at what are things like, what are trades that certain businesses have to put on over the weekend? Are there certain things that happened over the weekend that they have to hedge themselves against, and that's why, and so we get some order flow that we're not expecting because of that.
Kevin Wimmer says at RJ Wheel, but then this is their fault for going after their stomach feeling lol.
But they don't seem to be reacting to the overall sentiment and fundamentals setup of the day. Or if they are, they're saying that the changes aren't really important. Hu Xixin, it is a death knell indeed, however, not sounding for high degree autonomy of Hong Kong, but for the U.S. intervention in Hong Kong. Americans are dying and the U.S. economy is moaning. What remains strongest is the mouth of the Secretary of State, which can earn him an honorable nickname, Lying Pompeo. Says Hu Xixin, state media propaganda outlet of the Chinese People's Republic of China. Man. Like, when it was the oil war, like, he would say stuff and we're all listening to him to see what China thought about the trade war, and it kind of would give interesting insights into what China's thinking was at the time. But now when you look at it this time,
RJ Wheel says my point is never trade a hunch, get a technical edge and use that over and over regardless of news or expectation of market sentiment.
So here's the thing. The theory, the underlying theory. So here's how do I put that? Because you've been here all week, right? And listening to me talking about it, right? So I think that we both realize that at the moment we're on different sides of this argument. So my challenge too would be to prove what the technical edge that you can get is, because my position isn't that a technical edge doesn't exist, but that a technical edge is so small that it's not really worth trying. And that you'll get a bigger edge.
RJ Wheel says not to go Gary Rich on you, but
yeah, that's my position, is that the edge that you can get from a technical edge is so small and almost insignificant compared to the edge that you're going to get from looking at the fundamentals. That's my position. So my question to you is, how do you prove it? Like, can you prove that you can get a technical edge that's significant? And I'm going to guess most of us just don't have the ability to show our own results and show that, but there might be other ways to prove it, right? What that is, I'm not quite sure, but that's the difficulty that I've had. I can find what I think is a technical edge, and it will work really well for a while, and then it changes. And my only conclusion is that anything, well, this is not a conclusion, but when I started thinking about the robots, and when I realized that anything that I was coming up with from a technical edge, a robot probably already found randomly and tested, then how can that ever actually be an edge? The robots, it's never going to be a consistent edge, at least. It's just going to be a metagame between robots changing strategies. And can you predict the way in which the robots are going to change their strategies? Well, have yet to see anybody show results that show that. Most of the results that I see from people, they're either showing results that like I can't tell you how many times I've seen this where somebody says, "Oh yeah, I'm making money," and you look at it and it's like when they make money, it's like a tick in
Kevin
the
Wimmer
evening.
says, so Seth wants us to spam him with our trades lol?
Well, no,
RJ Wheel says Tech Edge must be constantly retrofitted to market conditions. Range, volatility sentiment.
Well, yeah, but
Kevin Wimmer says prepare for my crude oil settlement trading screenshots.
Yeah, now that might, Kevin, but that's not a technical edge, right? You're playing something fundamental about the way that the market behaves on the close. That's a fundamental edge, in my opinion. You're using something that is beyond just the market generated information. You're using something that comes from outside of the market, that there's going to be a close. Yeah. Well, they came back down there pretty quickly. It's been doing this back and forth pretty much all session, though, right? And the treasury's back up again. And how long did they hold there? So you're actually getting a head and shoulders pattern of sorts. But, well, actually, I think you could call it a head and shoulders. But if you measure the actual pattern, it's already played out. So there's that.
RJ Wheel says Kevin Oil I don't know. But indexes I'm talking about re-holiday. Kevin Wimmer says yeah, but I use technical levels like support or resist to enter.
Okay, sure. Yeah. So let me just go back through my case and be a little bit more specific so that we're like really clear. Okay. My contention is that I've been thinking about this really hard. Okay. Because I've been trying to be so specific that everybody can understand it so that we can have this big grand debate about it over the next couple of months. All right. My contention is that a technical edge is a poor basis for a trade compared to a fundamental edge. That does not mean that technical edges do not exist, and that does not mean that you should not use technical edges. But what it does mean is that that signal generator, the trade idea thing, it does not come from, oh, I saw this particular pattern or we reached this particular price, and therefore that gives me a signal to buy it. But rather, you already have an idea. You know, based on value and fundamentals, where it is likely to go, and then you use the technical edge to refine your entry. Right? That's where I think that technical analysis comes into play. Because, like, think about it. If you have a trade and it works based off of a technical edge, and you have a historical probability of it working. Okay. So let's say that 55% of the time, this thing works. So if you took it that time and it worked, was it because of that edge? No. Could have just been random luck, right? But if you come in and you say, oh, Donald Trump tweeted something, and ergo I'm going to long or short the market based off of what he said, and you're using it based off of from a fundamental perspective, and you take that trade and it works out, was the thing that got you into the trade the reason that the trade worked? I would argue yes in that instance. And so that's where I see them as different. So that's why my argument is you're better off trying to use fundamentals as a basis for your trade and then use technicals to kind of refine it. But that's where my question can you show me something that is system? And of course, you're going to need to adjust for things like the volatility, like you're saying. But those are all things that you can program for, right? So I want to see a technical edge that has a
Kevin Wimmer says would say this is a combination between fundamental and technicals TBH.
It is, sure.
Kevin Wimmer says just posted my idea from yesterday.
But it could be, I think you use them. I think you could, I guess the other corollary to this would be that you can probably do okay based purely on fundamentals. But I think that somebody trading purely on fundamentals would tend to do better than somebody trading purely on technicals, right? But the whole thing is can you make a system that only uses market-generated information? It's only using price, and right? So if you come in economic data, so like I'm looking at a lot of people talk about algorithmic trading, and they say, well, there's all of these hedge funds that do algorithmic trading. I was watching a video from they interviewed a guy that was leading a hedge fund, and they said there was no discretion involved. But what were they actually doing? They were looking at fundamental events, and then they were doing a historical analysis on how the market tended to react to that kind of an event. So in reality, all of the data that they were looking at was not market-generated information. The things that they were using for their signal was all purely data from outside of the market, fundamental information. Coronavirus vaccine developed in China shows success in phase 1 clinical trials. Biden says U.S. should lead world in condemning China over Hong Kong actions. Well, Biden definitely has to get in front of that because everybody sees him as a Chinese lackey. Markets. So this time, now that they've come back down here, the amount of volume and activity that we're seeing is pretty iffy. Anyways. Oh, so here you sent me the pictures, I see. Close with 6. So here's when I'm looking at your trade here, Kevin. And this kind of brings up another thing that I've been thinking about, which is that it seems to me that the way to do this is to say this is value. There's this price, and however it is that you've determined what it is, there's this price that you believe is value, true value, like where it should trade at. And maybe it's where it's been trading the most recently. That's kind of what I've been using. And what you're really doing is you're looking for an overextension beyond that value and looking for it to come back in. And if the way that I'm doing it is I say, okay, here's the fundamentals. Based on the fundamentals of which value area should it go to? right now, the bet that I'm making is that the value area is probably closer to 2940 or 2960 than it is to 2920.
RJ Wheel says I agree Seth, news is important. It's a complicated issue. News can wipe out a technical pattern in a nanosecond. To ignore that fact is to die.
News can wipe out a technical pattern in a nanosecond. To ignore that fact is to die. Yeah.
Kevin Wimmer says honestly explaining how I trade during the settlement isn't something I can write in 200 characters lol. What I can say is I always look for my plays during 9:28 to 9:35 and 12:28 to 12:45 your time. RJ Wheel says but to trade a fundamental with technical is really hard and takes a lot of knowledge to be a Jim Rogers or Tudor Jones. That's hard to replicate.
Yeah. That looks like maybe they're gonna go lower again now. They're kind of being slow again, though.
RJ Wheel says without technical I obviously meant. Kevin Wimmer says and always depends what is going into to close, very choppy, trend and so on. Smash the Bid says emo the market does the same stuff every day. The absence or addition of liquidity is what causes changes. Less liquidity equals less precision. More liquidity equals more precision.
Well, so it sounds to me like what you are saying, Smash the Bid, is that, well, actually, maybe it's not. I do think that the market tends to do the same stuff every day. I think that there's these patterns in the way that it goes. Like, normally, the pattern that I would normally expect to see is that they would test lower. They wouldn't really be able to get to a significant level lower. And so then they would turn around and move and start testing higher and bust out higher. That tends to be the pattern. Today, it's not happening. But hey, maybe we just say, for the sake of argument, that today, there's a percentage chance that the pattern doesn't happen, and today just happens to be one of the minorities of days where it doesn't happen. Okay, sure, fair enough. But the contention that I'm making is that you'll see the pattern, but your ability to predict which pattern it's going to be is iffy. That, like, you're talking about something that you actually can only predict, like, with a 5% edge. And so your results are always going to be unreliable. And there's this whole thing about the market can flip on you. And whatever historical edge that you've put on is useless now because the market's changed. So
RJ Wheel says
we
well
might
put,
not be
Smash.
saying different things. We might not be saying different things. But maybe what you're saying is the market tends to do the same things every day. And if you know the pattern to look for, you can trade it and you can become reliably profitable, which would be the exact opposite of the position that I'm putting on. And to which point my thing is, because I can't prove this thing one way or another, really. So that's why we have in the discussion, right? So show me something that convinces me that actually you can. Because the people that out there that are claiming that they can are full of shit. that have shown me stuff. Most of them are full of shit. Or the thing that's funny is a lot of the people that I've looked at that they show me good statements, and of course usually it's just like a short time period, like a month or something. But when I talk to them about what they're doing, and I go in and I say, okay, yeah, but this piece of information came from outside of the market. This piece of information came from outside of the market. You think that it's the technicals that are doing it, but really the thing that is making you profitable is your understanding of the market, the information that you have that comes outside of market generated information. Because that to me is the key different. I like that because it's so clearly defined. Where did the market come? Was it generated by the market or not? Right? And I say if it's a piece of information that's not generated by the market, then it's not a technical edge. It's a fundamental edge. That's a differentiating factor that I make. Or thing. Sorry, you guys are probably already responded to me, but the comment about news wiping out technicals in a nanosecond, that is hard to square with the latest news hitting the wires and the tape response. I'm not quite sure what you mean there. But it comes down to trading in a manner you have enough faith to be comfortable, so all roads lead to Rome. You have to be on the gold line one for you. Well, I don't necessarily know about that one. I mean, that's the whole problem here is people. You come in and you find a system, and for whatever reason it is that you believe in this system, but I'm starting to find that the reasons that people believe in different systems is really quite silly, and that people are very easily led into complete scams. But anyways, we pick a system that we believe in, and then we start trading it without really actually knowing how effective or reliable it is. And then we trade it on our own trading, and we find out that it's not reliable. But then when it's not reliable, we don't blame the system, we blame ourselves, or we may come up with some other excuse because we don't want to accept the fact that we put our faith in something that doesn't work. This spot, it's interesting. The 2932. Finding the right road takes years or never happens for most. Well, yeah, and all of the people that I've seen that seem to be actually doing well, they've been doing it for a very, very long time. And I don't think that most of them can really express what is the word? Concisely. I don't think that most of them can really concisely explain what the things are that they're using that makes them profitable versus other people. Hence, today, technical trading can work until it doesn't. Technical traders are usually correct because they do not know why a range exists and have no insight into why it changes. And when it does, they are ruined. Well, yeah, I think maybe it's more broad than that, though, right? I think that a lot of technical traders that maybe have found an edge in their market, or believe that they have found an edge in their market, they don't actually understand why it works, which really kind of puts it into an interesting perspective when you look at things like what is this? The robots, right? Like these robots, machine learning algorithms can create this strategy, and you can look back at the strategy and the code that is generated and be like, well, I have why would that even work? Like that makes no sense. They don't even understand why the machine algorithm is able to make money doing it that way. And it could just be a correlation. It could just be that your strategy happened to put you long more often than short, and it was a trending up market, Elliott wave traders are the most adamant of their tech. And kind of the thing that got me going on this. Sorry, my lips are like really chapped, and I'm like, I can feel them. I'm so ADHD, guys. If there's something like that, it just bothers me and I just can't focus, man. So I was watching Gary Norton. And one of the things that Gary Norton says many times and was like, hey, if you see an iceberg, you don't know why that iceberg is there. You can't just say, oh, there's an iceberg there and buy it. Like, your analysis has to be more complicated than that. And the realization when I was looking at that was like, okay, like we have all of these order flow tools. What's happening is we're trying to use order flow tools we're trying to do technical analysis on order flow tools. And when the whole argument for using order flow tools was that it was an execution edge and that it's not technical analysis. Yeah. Spots must know where that was going to take my brain, because he says you mean next to the jigsaw goobers, right? So the whole thing in Jigsaw is that we're saying that we're not using technical analysis. But then when you look at the way that a lot of retail traders try to use order flow, actually we are trying to use technical analysis. We're seeing something that happens in the market, some pattern or price or thing that happens, and then saying, okay, I think that's significant. Back testing it, keeping stats, and then using that as the basis for a trade based on the stats that we pull out of it. That's technical analysis. You're making a trade based purely on market-generated information. I think that maybe Peter Davies is seeing and acknowledging that, because what are the things that they're looking at now, or that they're pushing now? News trading with Axia, the Gary Norton scalping manual, which, again, my understanding of Gary Norton's style is that he has a price that is value price, that he has a way of determining and can be based on information beyond just market generated information. Right? So I think they're kind of realizing that. But that's the argument. So how much edge can you actually pull out of market generated information? I think right now, my opinion is, but I can't prove it, and that's why we're having the discussion. My opinion is that you can't pull a reliable edge out of market-generated information. And it's interesting to me that we're having a debate that's been going on for 100 years. Wouldn't volume be considered market-generated information? Do you think there is edge in volume? Yeah, this exactly it. Smash it in. So I do believe that there is edge in market-generated in volume. Volume is market-generated information. And so that's why I kind of am specifying it's not that market-generated information doesn't have edge. It's just it's not consistent enough to give us the kind of results that we need. If it's insider information, you'd have an exponential edge. Yeah, well, but that's the thing, is it doesn't have to be insider information. It could be public information, but it could be things that most market participants don't know about, right? And that happens. So I will give you an example. When we had the Rand Squawk, they would talk about corporate bond offering deals that were being made. And I was like, well, I don't know why they're talking about that or why that matters, but it's something that they talk about and they were just talking about. Well, I have since discovered that when you make a bond offering, that you typically come in and hedge yourself against the interest rate risk, which means that you come in short. And that those can be pretty big shorts. And so what will happen is you'll see the market is moving down, and then you hear, oh, there was a bond offering deal was just made, and so probably that move down was those guys that were just hedging themselves. And once you know that, you go, oh, okay, well, I should buy it then, because we're going to continue going back up based on all, of course, the other things that are going on. But that was an edge. That was an edge that, first of all, to take advantage of, you would have to have a news squawk that you pay $250 a month for. And two, you would have to actually understand what it was and how to use it. It is an edge that nobody that I got from listening to Gary Norton talk, and that I have never heard any other retail trader ever talk about. Is that an edge that you could potentially take advantage of? I think so. And that isn't well gamed out, you know what I mean? So there is knowledge that we can acquire about the market. It doesn't have to be insider information, right? Yeah, union of fundamental and technical analysis can give you a greater edge, and most successful traders use some form of fundamental information in their trading decisions. Yeah. Yeah, and that's where I was saying, like, when you look at a market, like, especially, like, to me, a lot of the things like Bollinger Bands. Bollinger Bands is probably one of the best examples. It was interesting to me, Anthony Crudelli, it seems like he really utilizes Bollinger Bands. But the way that he talks about them in the videos that I've seen from him so far, it doesn't sound to me like he uses the Bollinger Bands as a signal. In fact, really the reason he likes the Bollinger Bands is because it keeps him out of bad trades, right? So it seems to me that technical indicators can show us a lot of things, like if the place that we're going to get the entry at is actually a relatively good spot based off of, like using the volume. We can use volume to kind of judge where value is, right? So that's using a technical edge to refine your entry. So it definitely can't be the case that technical analysis has no edge. It certainly has to have edge, but the thing that I think that where I really have an issue with is like that technical analysis is predictive. I don't think that it is. But fundamental data can be, if you're fast enough. And there's been a lot of situations, this market hasn't really happened today, but there's been a lot of situations in this market where fundamental news has come out, and yeah, there's an initial move, but then the best trade is still yet to come. And if you took it based off of that fundamental basis, you would have done well. Well, it's pretty slow down here, and they are kind of slowly trending up. This is like really weird behavior. I wonder if we're just going to kind of hover down here until the London close, and then maybe they'll move, and we'll see if they actually go up or down. I know sometimes they'll do this to me where I have a...
Adeptic says we now have close to 40 million
Where was it even getting that from? Anyways, so here's the thing, though. If we were going back to my thing, and this is kind of where my grand point is really coming from, is if a technical analysis is not predictive, and a fundamentals can be, then as beginning traders, let's not consider ourselves beginning traders, but let's just say as developing traders, I think that our time is probably better spent trying to understand what the fundamentals of the market are and how it's influencing the market, rather than digging into trying to find technical edges. Yeah, but insider information definitely helps. Just ask some of our senators. Senator Burr agrees. Yeah, that's true. Talk to me about fundamentals when the stock markets take the upcoming depression into account with real unemployment and 20% in up range. Will it take actual food riots to catch its attentions? Well, yeah, but there's other things at play as well, right? The thing that I find is interesting is that to me, fundamentals is not just Okay, so here's a piece of information that is not market generated information, but is not fundamental information in the way that you're thinking of. Okay, market sentiment surveys. So it tells us something about the markets, but it's not market generated. It's somebody has to come in and do a survey outside of it. Interesting, right? And I believe, or I'm starting to learn, that market sentiment is a extremely important and influential factor in price movement. That essentially what happens is day traders come in, big funds come in, and they determine what the sentiment is for the day, and then they trade based off of that. And so sentiment can be disconnected from economic numbers for significant periods of time. Oh man. Well, I'm going to give this 10 more minutes, but I need to use the bathroom. Okay, so 10-year down a tick maybe. When was this? 9:15? Oh, they actually moved down and back up. And the E-mini is still like, who knows how this is going to turn out. Tens of million out of work money that was plowed into the indexes from 401ks is evaporating. Shouldn't that boat anchor on stocks, particularly those in the index? This market makes no sense. I think that one of the things is that most people haven't really had to feel the pain. That's one of the problems. Another issue is that so like, for instance, people not contributing to their 401k. That's definitely something that the market should have already seen is that a certain amount of buy side demand has gone. But with stocks, it's not just supply and demand, really, is it? Right? There's also value, and that companies are going to be worth more in the future is a factor that we have to consider too. So I really think the problem is most people have trouble thinking out of the box. Most everyone is looking at and doing the same stuff as the next guy. Well, okay, so I think you have a good point there, Smash the Bid. I think that you're incredibly unlikely to be successful doing the same thing as everybody else. So if you are going to do technical analysis, it better be something that is beyond just the built-in stock indicators on your platform. You know, let's all agree with our old pal Gary Rich trade. What you see now, what you think going into the oil close. You know what? I tell you what. Of all of the market, what is the word? Like sayings that are commonly thrown around. That one probably bothers me the most because what I see is wrong all the time. What you see is often not what you really think it is. What you see is so influenced by your view on things and so many other things. Like, hey, look, don't trade what you see. Program it into a robot. Okay, you have a robot. It's going to take specific rules, and it just does what the specific rules are. I think that that's the intention for what people are saying here. But then, if that was the case, then why aren't you trading it with a robot? Because if you like really at that point, if you are going to if you are of the opinion that technical analysis is really the way to go, then it's dumb not to use a robot. You should be spending all of your time learning how to program and creating better robots so that you can trade a purely mechanical system. I think the problem is that there are a lack of bankruptcies that really should be there now, but are being salvaged by the Fed. Probably true. I mean, people have been saying businesses are going out of business every day, but I don't actually see anybody in the market or any statistics showing that that's what's happening. I tell you what, the market behavior today is just so unusual to me. This thing right here, this move up, extremely unusual trend to just kind of like slowly go up over such a wide range, over such a long time. And then for it to eventually break down and go lower, but not break the low of the day. Again, really, really weird to me. Like we say, there are patterns in the market. There surely are, but I've never seen it do this before. Definitely never seen it do this before. Something weird's going on. Fed is printing money for all it's worth. However, they can figure out how to print jobs, income, and actual economic activity. Seems rather algorithmic. Yeah. But I this goes back to value and sentiment, right? Because they're doing that, this allows the banks to continue their operations. So they can continue to trade based off of what they think companies are going to be worth and what the current market sentiment is. And they don't really have to worry about their own funding or lack of funding or whatever. And so a lot of those things aren't necessarily going to take hold. You would have to have an actual change in sentiment. There would have to be something that comes out that says to people like they just cannot deny the reality that the company earnings are not going to be what they think they are. If the Fed was putting trillions into the pockets of people, then you'd see economic activity dropping into the banks, and expecting them to distribute funds is really stupid. Well, yes and no. So if you gave it directly to people, then they would spend it. They would create economic activity. They would create economic activity in consumer discretionary areas. And that might not necessarily resolve fundamental problems in our economy. Okay. When you give money to a bank, theoretically, it should go into companies that are valuable, right? So the whole thing is like, money's not idle money. If you go and you invest in a company, then that money is used to fund the operations of that company. If you buy a bond, that is also, that could also be a company bond. It could be used to build infrastructure for a country or for a municipality, right? Like the money doesn't just sit there. So that money is being used to generate economic activity. It should be. Well, it will. I mean, it's being used in some way. But then the question is it the way that it's being used actually the most efficient use of capital? And I think that what is happening right now is that we have created such a market distortion that now, like, value investing is dead, right? People have been saying that sort of thing, right? Value investing is dead. The money is not actually going to the places where it will generate the most value for the economy, and ergo, it's not creating growth. Hence, lower GDP growth, because we're keeping companies, we're putting the money into companies that frankly need to die, that made poor decisions, are making poor decisions, and aren't innovating, and aren't building a future, right? They are preventing any new growth of new businesses, says Adeptic. Exactly. Our intervention has become so extreme that we have created a market distortion that prevents us from really growing the economy the way that it should. It prevents capitalism from working the way that it should. Exactly. You just explained why it's dumb to give it to banks. Yeah, well, I mean, it's not. I don't want to say that it's dumb to give it to banks. It's just like, for everything, there's positives and minuses from it. And there's not really a good answer here. Because if we just let the whole system fail, like, oh, man, listen, there's always a bailout of some sort. I think that we're going to have to go back, and I don't know how long it's going to take them to figure this out, but I think that they're going to have to go back at some point and say, well, yes, we do need to bail companies out, but we're going to have to be smart about how we do it, you know? And some companies, if we decide that they're too big to fail, maybe we prop them up for a while, but then over time we wind them down or something. I don't know. It's dumb for the Fed to interfere in the market directly. Well, yeah. So the buying the ETFs thing, I don't think they should be allowed to do that. I don't think that that is in line with what the Federal Reserve's charter was. Okay, well, it's 9:30 now. Market's still kind of acting odd. Don't know. London's gone. They are spending a lot of time down here. Oops. Yeah, I'm not, like, when I'm looking through a lot of things, I can see that the treasuries are kind of offered now again, except for the 30-year. So they might want to move down. But, and if I come over to my volume profile and look at, now that we've traded down here, oh wow. So in the first hour of trade, we traded like 30,000 contracts down in this area. And then in the second hour of trade, we traded that much there again. it may be the case that 29.32 is just the price and we're going to stay there all day. Oh man, guess which unlucky bastard had a long limit on 32.63 and didn't get filled in oil? Oh, I don't think watching your stream gives me bad luck. No, Kevin Wimmer. Being superstitious is bad luck. So don't be superstitious. Anyways, you know what? I maybe we'll go back up to the open and we'll close the day higher. It is going to be interesting to see how this is going to turn out. I wish we could stream so that we could show the whole thing, but I'm just gonna play out the trade and see what happens. It's weird action. It's weird action, man. Cannot explain this behavior. I guess of any day that we would expect to see it would be today, right? Thinking out loud here, if the Fed is covering losses, why not invest in stocks? Aren't companies restructuring so that they can maximize receipt of Fed money and push debt onto taxpayers? Because I don't think that the Fed would be very good at picking which stocks need the money and which ones don't. And honestly, when you get into it, there's all sorts of problems with that. But, you need to control markets for sure. Like I don't think laissez-faire is the way to do it. But the further away that you get from laissez-faire, the more likely you are to create market distortions, right? So we've certainly done that here. Well, they're kind of pushing the upside of this again. We'll see if they make it out. I'm going to shut things down, though. I need to get some water and feed the birds and all that before my morning meeting. So we did really well this week, today, Friday, which we would expect. I think when we come back, because I'm not going to trade this live until September, when we come back on Fridays, it's going to be like if there's news, maybe I'll trade off of the news. And then like after that, nah. Because weird stuff happens on Friday and I always have trouble. We got to understand more about what's going on Fridays. I should ask Gary. I'm going to do that. Okay, hey, I will see you guys on Monday. And on Monday. We're going to program on Monday. And if not, I'll see you on Tuesday. And in the meantime, stay profitable.